Good day, ladies and gentlemen. I hope you're well. So today we're going to be talking about Bitcoin dominance. Bitcoin dominance is Bitcoin's share of the total crypto market value. So that basically is the amount of Bitcoins that there are in the crypto market divided by the total crypto market. That's Bitcoin's dominance. And we're going to learn about the history of Bitcoin dominance, what it is, how to use it, and what's happened in the past, and what we could see perhaps in the future. I'm just struggling to share my screen with you. One moment. Mhm. Okay. So that's Bitcoin dominance. So the reason why Bitcoin dominance is important because of capital rotation. And I've spoken about this multiple times on the channel. So when Bitcoin dominance rises, Bitcoin gains a higher share of the total crypto market versus the altcoin market. And that's often called risk off. Sorry, I had some gum and I've got some paper there. So that's called risk off. When dominance falls, altcoins are gaining a larger share of the total market cap of Bitcoin versus Bitcoin, and that's normally called risk on. So alt season, you can have alt season vibes with Bitcoin as well, but it's not guaranteed, and I'll go into why it's not guaranteed. One important news is it's not like Bitcoin confidence is Bitcoin dominance is not a weighing scale. So every time Bitcoin dominance goes up, alts go down, or when alts go up, Bitcoin, the price of Bitcoin goes down. It's not like that because dominance can move. It can move with or without Bitcoin's price going up. And that's because when alts move, it could be due to an alt move, it could be due to supply, demand, value appearing elsewhere in the crypto market. Things like stablecoins, and we'll be talking about stablecoins quite a bit. New token launches, and we'll be talking about Ethereum. Have you ever wondered why Bitcoin goes up, Bitcoin's dominance goes up, and then the money rolls into altcoins? There is a reason for that. Sorry, into Ethereum before other altcoins. There is a reason for that. So it's directly not an in and out metric, if that makes sense. Let's just quickly see who's in the chat. I do apologize for starting a little bit late today. So we've got John Legend and we've got Rob C. Both of them are part of the Princesses Army. We've got Crypto Billy. Hello, Crypto Billy. Nice to have you here. We've got Silver Days. I hope you're well. We've got Gary Littermore. I hope you're well. Oops, and Taylor. Taylor Fritz, I hope you're well. We've got Jessie. We've got Jessie as well. Hello, Jessie. I hope you're well. We've got Lasers. Go Pow Pow. I love that username. I remember Lasers from the first time I actually did a live stream because I choked on his name. He knows. He knows. Gary again. I hope you're well, Gary. Actually, in the UK, the reason why I'm late is that we've got very severe weather warning. And we got the weather warning when I was in central London, and all of a sudden, there were literally traffic jams everywhere. Apparently, a lot of snow's coming in. Peace of my mind. Hello, peace of my mind. I hope you're well. It's always lovely to have you here. Peace of my mind. Are you in the Discord? If you are, I'll put you in the Crypto Army little Discord that we have. Okay. Awesome. Okay, so let's talk a little bit about Bitcoin dominance. I'll share my chart later because the one thing that I do want to talk about, and I do talk about this quite a lot on my channel, is whether it's on-chain data or if it's off-chain data. Remember what on-chain data is. We talk about this a lot. On-chain data is data that directly comes from the blockchain. Off-chain data is different. With Bitcoin dominance, it is off-chain data because it's calculated from market caps. How much of the total crypto market is Bitcoin versus everything else? It uses exchange prices and it also uses data providers. But some people do call it a mix of on-chain and off-chain data because the supply data comes from the blockchain as well. And some analysts use a modified on-chain version like realized cap dominance and all that fun stuff alongside the standard metric. Now we're going to be talking about the standard metric here, the Bitcoin market cap, sorry, the Bitcoin dominance. That's off-chain data. It's built from exchange prices and market cap data, and I'm actually going to be using Trading View to show the chart of the market cap of Bitcoin dominance. And I'll probably be showing it on the monthly chart because we are zooming out. One thing to note before I go any further is that there are other charts. Now, these are market cap charts and they are on Trading View because everybody uses Trading View, and they split the market into groups so you can clearly see where the money is rotating. All of these charts are important. You have the total chart, which shows the whole crypto market size and direction. You have total 2. Now that keeps everything, that shows you everything except Bitcoin, and it tells you whether altcoins are gaining strength without Bitcoin. You have total 3. Now this keeps everything except Bitcoin and Ethereum. So it takes Bitcoin and Ethereum out of the chart and it isolates the broader altcoin market. So you can see if the rest, if everything else is running or lagging. You have another chart which is called Others. That filters out the top 10. So it tracks medium and smaller cap coins. And that's useful for spotting risk on speculation. There are more charts. You have total 2ES. That removes Bitcoin and stable coins. Stable coins can give a false reading. And we'll come to stable coins. So it's like altcoins excluding Bitcoin and stable coin. That's total 2ES. You do have total 3ES. That removes Bitcoin, Ethereum, and stable coins from the other market, from all the other altcoins. So you're watching true risk assets there. These charts can help you find and judge market leadership. So what's Bitcoin led, what's Ethereum led, what's broader altcoins, where are the stable coins, etc. And it tells you more about the risk appetite of the market, whether it's high caps or small caps, and where the rotation is, whether it's rotating, whether capital is rotating and spreading out. These charts exist in other places outside of Trading View, such as CoinDeco and CoinMarketCap, but they are labeled slightly differently. With Bitcoin dominance, there is a warning because there are traps. It can move because the dominator, the total market changes, even if Bitcoins and altcoins are not doing anything special. That's where stablecoins come in. Stablecoins can distort it. Stablecoins, things like USDT, USDC, can grow a lot when people, institutions, and now governments are coming in, they're issuing stablecoins or they're selling their bonds, etc., to the stablecoin companies and taking their dollars. When alts go into stable coins, it's kind of considered risk off. A lot of people park a lot of cash on exchanges that's normally in stablecoins because they keep the value close to the US dollar. Or whatever currency they're pegged against, or whatever they're pegged against, because they can be pegged against hard assets as well. Um, so, when you move money on chain for payments, that can distort Bitcoin dominance as well. New stablecoin supply being minted. So, how are stablecoins minted? If, say, for example, a company comes along and says, you know what, I want 10 million stablecoins, they will give that money in fiat to stablecoin company, and then that company will mint those stablecoins. That's how stablecoins are created. They're not created out of thin air. It's not like fiat. It can increase the total market cap, the dominator, because stablecoins have market caps too. Another thing that we need to consider now in this bull run is when we're looking at Bitcoin dominance. Sorry, let me just quickly have a look at the chat because I've got it on a different screen. Yeah, we absolutely, in the UK, we can't do anything right. A little bit of snow and the whole country comes to a standstill. Okay, awesome. Okay, let's talk about the Bitcoin ETF. This is something that wasn't in the previous bull runs, because later on we're going to be looking at how the Bitcoin dominance behaved in the previous bull runs. So the Bitcoin ETF adds a new layer to how we read dominance now, because the ETFs create a regulated ramp on straight into Bitcoin that institutions and governments and even people can use. A lot of money can come onto Bitcoin, onto the blockchain very, very quickly. When spot Bitcoin ETF sees strong inflows, money coming in, that demand often hits Bitcoin first. It lifts the Bitcoin market cap faster than the rest of the market, since the dominance is Bitcoin market cap divided by the total crypto market cap. ETFs people buying, or institutions or governments buying ETFs can push the dominance up, even if altcoins are doing fine and they're laying flat. It can look like it's a risk off thing, because obviously when we talk about risk off in crypto, we're talking about money in Bitcoin or stablecoin. Consider Bitcoin mainly considered the safest asset. And this is just literally new Bitcoin demand, but it can affect the dominance, and it does affect the dominance. It also changes the timing of rotation. A lot of money can enter quickly via ETFs because institutions can buy this way. And when we did a live stream on ETFs, we went back and we discussed how institutions and large companies and corporations were buying Bitcoin before the ETFs. And it was difficult because you had to have, you had to know the regulation, you had to know the regulation, you had to, where you're going to store it, the security, all the rest of it. That's why the SEC didn't approve the ETF in 2013, 2014. That's why it kept putting off the ETF until 2025, because the rules and regulations were not there. How to keep things safe, how to avoid, hacks and all the rest of it. So it actually changes the timing of rotations now. A lot of money can enter very quickly through the ETFs. Institutions are buying this way. Institutions always, they buy. A lot of them also buy not just from ETFs, but from OTC, over the counter, exchange, over the counter basically. Bitcoin dominance can stay higher for longer because profits rotate into ETH first, and we'll be talking about why profits go from Bitcoin, or why money goes from Bitcoin into Ethereum, which is actually very important. And when I was doing research into that, I was like, oh my God, that makes so much sense. So in an era now of Bitcoin ETFs, Bitcoin dominance is not the same as it was in previous cycles. We need to talk about before we go into the dominance, what's happened, the history of Bitcoin dominance, what's happening now, and what could likely happen in the future. We need to talk about stablecoin history and the impact that it has on Bitcoin. Now, stablecoins have been around since the early days of Bitcoin. BitUSD was launched in 2014. Tether was launched also in 2014. I believe BitUSD was the first stablecoin ever launched. Tether was also launched in 2014, but their real macro impact came much later. Stablecoins scale in a new major asset class. And we saw that in the last cycle. Roughly between the halving year and the halving year 2020, 2021, the bull run year, and 2022, the bear market year, we saw a lot of activity with stable coins. And it all makes complete and utter sense. Why? What happened in 2020? It was a halving year. Not only was it a halving year, you had COVID, you have a lot of money sitting around. That money made its way into crypto, it made its way into stable coins. What happened in 2021? We had the bull run. That money was utilized. A lot of profits were made. It was put into stable coins because it's difficult on-ramping and off-ramping all the time, especially for institutions who have a large amount of money and also for traders who are often trading. And then obviously what happened in 2022? That was the bear market. So a lot of people were taking profits and putting and rotating into something that was more secure, stable coins, because Bitcoin was also going down. It was a bear market. Because Bitcoin's dominance is Bitcoin's market cap divided by the total crypto market cap, then stablecoins market cap grows. It inflates the total, the denominator. It kind of makes it seem like there's a lot more, and that can push the dominance down. Even if altcoins are pretty much doing nothing. So a falling dominance chart can also be a fake, because it might not even be a altcoin season. It just literally might be that people are on-ramping money into stable coins. Another thing to consider is that a lot of US debt, they're talking about selling it or putting it into stables, giving it to stable coins as in forms of bonds, etc. The stable coins will then give them their US dollars in return, and then obviously the stable coins will get an interest on the debt that they've taken on from the US government as well. That's going to affect the the dominance of Bitcoin a lot. Also, the macro caps. On the macro cap side, stable coins act like on-chain dry powder. So they can make it easier for capital to rotate quickly into new narratives and smaller coins. So you can get this sharp micro cap pumps even while the dominance is being distorted by stablecoin expansion in the background. Bitcoin dominance can also fall without alt season if people are rotating into stable coins, and the total crypto market cap can grow as well. Sorry, the total crypto market cap can grow. So Bitcoin becomes a smaller percentage, even though it might not be doing anything, and altcoins might not be doing anything, literally because money is being put into stable coins. Before we get into Bitcoin dominance, this is really important. We need to know about Ethereum, and when I show you the charts, you'll understand why I am mentioning Ethereum. So Ethereum was started by Vitalik Buterin. The idea came in 2013 when he was still working at the Bitcoin magazine. Development was funded by ICOs. That's a crowdfunding sale. You get in early, you get it cheaper. The next year, which was 2014, it raised 41,000 Bitcoin. I think it's about 18 million at the time. That's absolutely huge. And the network went live in 2015. So always remember it like this. 2013, the idea came through. The white paper was written. 2014, they had the ICOs. 2015, it went live. What makes Ethereum different from Bitcoin is that it was designed as a general purpose smart application blockchain or platform. Vitalik Buterin was working at the Bitcoin magazine, and he saw firsthand how projects were trying to scale Bitcoin and build on Bitcoin, and they were not able to do that because Bitcoin's blockchain was not scalable enough and it wasn't designed that way. So that's why he went off and he designed Ethereum, and Ethereum was meant to be the computer of the world. And that's why you see this entire wave of ICOs. It was not just random. So right from 2016 to 2018, what was 2016? So Ethereum came live in 2015. 2016 was the halving year. 2017 was that epic bull run, and we'll talk about what Bitcoin's dominance did in the epic bull run. And then 2018 was obviously the bear market. The reason why we even had that ICO wave, that ICO boom, was because of Ethereum and what projects could do on top of Ethereum. So there was a later, larger ecosystem like DeFi and NFTs that came along. Scaling wasn't easy on level ones, although Ethereum did become hugely useful. It did run into problems early on, such as congestion and high fees. They're sorting it as much as they can, but Ethereum is very, very big. Ethereum or ETH is a native asset that's used to pay gas fees. Now, when Ethereum switched from proof of work to proof of stake, that it was called the merge, and it was in September 2022. Remember it? It was just before the bear market bottom, September 2022. ETH is now obviously used for governance and staking as well. Now, in the previous market cycles, Ethereum has repeatedly pulled liquidity and attention away from Bitcoin during risk on, i.e., when money's flowing out of Bitcoin phases. In 2017, the ICO boom, there was a huge amount of new crypto coming in. There was a massive market cap rise that was also created on Ethereum, with investors often rotating between Bitcoin for on-ramping, because that's what people knew what to do, going over to Ethereum. There was a lot of projects on Ethereum. A lot of the ICO boom was on Ethereum, and Bitcoin's dominance fell very, very sharply. In fact, the dominance just fell, it just went crazy, and I'll show you the chart in a second. Let me just finish just talking about Ethereum, because I just want to touch upon Ethereum rotation as well, because this is really important when we're talking about Bitcoin dominance. So why does Bitcoin, or the money in Bitcoin, tend to flow into Ethereum before smaller coins? And once we realize the capital rotation, we kind of understand what's going on with the dominance as well. So Bitcoin is the second largest asset, and it has deep liquidity, and that's really, really important. So after Bitcoin, Ethereum is usually the next easiest place for big capital to rotate into, because it's large, it's liquid, it's widely listed, and now it has a proven history, which is very, very important, right? Reliability is very important in crypto. It's actually more important than speed when it comes to blockchains, etc. ETH, the native token, that's the gateway to the rest of crypto activity. So a lot of altcoin activity historically sits on or around Ethereum, the tokens, DeFi, NFTs. So when traders move in and out on the risk curve, Ethereum is naturally the first step. When capital moves further into smaller, then capital moves further into smaller beta names. Portfolio behavior, the portfolios often rotate from safe to the highest beta. Now, in Bitcoin, what we tend to see, especially in alt season, is people put money, institutions put money into Bitcoin when the price of Bitcoin is low. They ride it up. As they're riding it up, the Bitcoin dominance also goes up. The price goes up. Traditionally, they take profits. And when they take profits, they're very happy and they can be a little bit more risky. So they obviously want to preserve their capital, especially if they're working for a hedge or a big institution, etc. So they go to the highest beta. And since the USA's spot, since the USA spot ETH, ETH ETF, sorry. I was going to say SEC, and I was like, that's wrong. So since USA's US spot ETFs were approved, and that was in mid 2024. I'm guessing around about May, but I'm not entirely sure. ETH has been more institution in ramping on capital rather than all altcoins. Bitcoin is still number one. So in many regimes, people take profits from ETH's strength. Then they look for the next best thing, the risk to reward ratio. ETH is first, then other high caps, then mid caps, then micro caps. And then we used to have the memes. Now, bearing in mind, we've had extended meme seasons as well. We will be having a live stream on what the current rotation is in Bitcoin in a couple of weeks with Bill Noble and Formation. So do stay tuned for that. Bitcoin dominance peaks. It then rotates into Ethereum. Then it rotates into the wilder crypto market. Do you remember when Ethereum, for anyone who was in the cycle, they will remember that when Ethereum came out, it was called the Bitcoin killer or something similar. Something similar to that. It was going to take Bitcoin's place because there was more utility on Ethereum and all the rest of it. It didn't. When Ethereum came out, then we had Ethereum killers that these other altcoins, will take Ethereum's place. It still has not happened. So with the rotation summary, money enters through Bitcoin first. Bitcoin is the biggest, most trusted, easiest for large money to buy. We're not talking about retail. If I'm completely honest, nobody really cares about 5,000 or $50 US coming into crypto. The crypto market is now in the trillions. It takes a lot of money to move it. So now with the Bitcoin ETFs, some new money can go straight into Bitcoin through institutions as well, and that's why this time around it's going to be a little bit more different. It's going to be different because we've got this thing right in front of us and we can see it with the ETFs. Anyway, then the money normally goes into Ethereum, which is considered the highest beta or the next safest asset in crypto. And once Bitcoin has already done moving, people feel more confident and they look for the next most liquid thing, and it goes down the chain. And it spreads into the other larger altcoins, moving its way down, or historically, that's what it's been doing. After the ETF moves, traders start to look for other places where they can have higher percentages. And this is what Bitcoin dominance is. When the dominance is so high, a lot of money is in Bitcoin. Not only that, the money's safe in Bitcoin, which is very, very important. And then it, rotates around. Alt season, just very quickly. So what exactly is alt season? Alt season, and we use the Bitcoin dominance charts to help us determine where we are in the cycle. And we're always looking for alt season, considering it hasn't come since, it hasn't come. It didn't really appear in last year. Alt season is when altcoins as a group outperform Bitcoin. So here's Bitcoin, here's altcoins. Altcoins are outperforming it for a substantial period. So in plain English, Bitcoin might be going up, but altcoins are going up faster. They're making more X's, you're making more money on altcoins. Or Bitcoin is going sideways, as we will see what happened in 2021, and altcoins are pumping hard. And I'll explain why that happened. The simplest way just to describe it is alt season is when the market intention goes from Bitcoins into altcoins. Okay, so if we look at 2017 first, let me just quickly check the chat. Hello, stupid Bitcoin. I hope you're well. Please change your username. I feel like I'm disrespecting you every time I say it. And Steve, I hope you're well. My brother-in-law's name's Stephen. Oh, Army Piper. Hello, Army Piper. I hope you're well. Mr. Alex, storyteller, I hope you're well. Hoof, nice to see you. I hope you're well. Right, okay. Let's have a look at 2017. Wait, am I on? What am I on right here? Okay. Right. 1 second. I'm just about to share my screen. Bitcoin dominance. Here you go. (2017) Bitcoin's second bull run and my favorite bull run. Okay, here we go. We're looking at 2017, which starts from around here. Okay, so Bitcoin's dominance was very high at the beginning of 2017. It was 96%. But as the year went on, it got weaker because money started to rotate out of Bitcoin into Ethereum, then into the wider altcoin market. Now, the reason why I'm not going into anything before that is because the market cap was just ridiculously small, meaning anything could move the market cap of Bitcoin dominance. So there's no real point looking at it before that. But as you can see over here, like we had like 98% Bitcoin dominance, 98% there. You know, it was in the large, it was very, very high numbers. There you go. When was that? 2014, 99% Bitcoin dominance. Then you've got January 2020, 2017, sorry, 96%. March 2020, 2017. Gosh, all at the top, it was very, very high. Why was it very high at the top? Why was it so high? Because Ethereum hadn't kicked off as well as it didn't really kick off. Money wasn't moving into Ethereum as it was. The ICO boom was just starting, if that makes sense. As the year went on, as you can see, it just went down. It got weaker and weaker. And then it ended the year at around about 40%. So we're talking well over 85% going down to 40%. And why was that? So in late 2017, the mania. So obviously at the first, the price of Bitcoin was going up, Bitcoin dominance was going down, but that doesn't matter. If we look at, can I show you this chart? I don't know if it's going to show. What is it? 2017. Okay, just completely ignore those. I didn't know I had those on. Yikes. Okay, so where are we? So here you can see the price of Bitcoin was going up, even though, can you see it though? Because I can't see you. Oh, you can't see it. Okay, not to worry, it's not coming through. But I was on the other page. I think I need to share the screen and not just this tab. Not to worry, not to worry. There's no, you don't really need to see it. It's fine. We all know Bitcoin, because I've spoken about 2017 so much. It started to rise and then it went crazy up. So in late 2017, the mania phase wasn't just Bitcoin pumping. It was the biggest excitement in altcoins, especially as the ICO boom, which was built mainly on Ethereum, with new coins launching and retail money flooding into what they were thinking was the next Bitcoin. By the end of the cycle, Bitcoin dominance had dropped, and then we see it go into, yeah, the first quarter of 2017. Let me see if I can share the screen. I'll share it in a second. The other part, the actual chart of the 2017 cycle. But in late 2017, you had a flood of new money coming into crypto, and that is why the Bitcoin dominance can go down, and it will go down. Why can I not share? Oh, okay, that's fine. Okay, you can see it now. So I love my 5 cycle top. You all know I do. I love it. Okay. So 2017, the beginning of 2017, the price of Bitcoin was climbing. The same time the price was climbing, and it climbed throughout the whole entire year, we also had Bitcoin dominance going down. Um, we also had Bitcoin dominance going down. How is that possible? It's possible because of the new flood of money that came into specifically the 2017 cycle. Bitcoin was still the major gateway to ramping to getting money onto crypto. Bitcoin made a new all-time high even while the ICOs and altcoins were booming, because Bitcoin was the entry point. Newcomers bought Bitcoin first on the exchanges, and then you often needed Bitcoin to then do all of the rotation that we spoke about. So fresh capital was flowing in through Bitcoin and then rotating outwards. Bitcoin was the blue chip of crypto, and it always is. It always will be. Even when people were gambling on ICOs, Bitcoin was still the asset the institutions and media refer to. And that's really important, because even though ETH in the community had a major, vibe, it was always Bitcoin. Bitcoin was king, and many investors held that as a core position and a core belief. The market was expanding, it wasn't just rotating. So that's why you see, even though Bitcoin's dominance is going up, the price is going up, because the money wasn't just rotating. A lot of money was coming in and flowing into Bitcoin. And then what else? What it was doing? It was bringing all the altcoins up with it. The total market cap was growing fast, so you could have Bitcoin rising and altcoins rising at the same time. Dominance was falling, our dominance only fell when altcoins outpaced Bitcoin. It doesn't mean that Bitcoin can't go up even though its dominance is falling, as we see in the 2017 bull run. If we look at 2021 though, okay, by the way, I'm on the monthly chart because there's no point showing you the weekly chart, if that makes sense. Here we go. Shall I show you the weekly? No, this is fine. The monthly is fine. We're talking about Bitcoin dominance here. So we're zooming out. There's no point, literally none, looking at Bitcoin dominance day to day. Yep. So Bitcoin dominance, it peaked. This is the, where is it? Here you go. I'm on the wrong thing. Half of my screen's covered, by the way. So Bitcoin's dominance peaked in January 2021 around, it says 72% here. I think it was 73% it's saying here. I'm pretty sure it was 72 somewhere, depending on how they calculate this stuff. And it started to look structurally weaker. As you can see, it's going down. It made its low in May at 39% or 40%, which is another way of saying that the capital was rotating from Bitcoin into Ethereum and then the broader altcoin market. After Bitcoin's dominance made its low in May 2021, it spent the rest of the year going into 2023 actually in sideways action, if that makes sense. Now, what you see is, what you see here is, if I can get this to work. The price of Bitcoin. Again, this is on the monthly. Should I put it on the weekly so you can see it a bit better? This is the price action. It would help so much if I bought myself a mouse. It really would. It's just I don't have anywhere to put it. Honestly, I just don't have anywhere to put it, especially with my desk. Where are you? There you are. So here, Bitcoin's price, Bitcoin's dominance, literally all this way, it literally went sideways. But here we've got another all-time high. So the later action in 2021 wasn't because of Bitcoin dominance, and this is really important. The rotation was the alt market again. It was DeFi, it was NFTs, sorry, it was metaverse, that metaverse narrative, which was absolutely massive. It was meme coins. It was fueled by mania. It was fueled by new capital entering into the market, and more than that, it was fueled by psychology, euphoria. A lot of Bitcoins by this time had already been taken off the exchanges, and there was a supply shock in Bitcoin, which also drove the price up. So the Bitcoin's move in November 2021, the actual all-time high, it was more of a slow grind, and you can see it here. It was more of a slow grind rather than a spike. I'm just checking the what's its name? The comments. Hello, David. I hope you're well. Hello, JR. I know you're here because I can see. Yep, there you are. Good morning to you as well. Duke's here. Hello. I hope you're well. Okay, awesome. For those people who are unaware, we do also have a Telegram group, Discord group, and X that you can follow us on. Okay, so after the all-time high, and what happens is dominance falls, but it starts to recover again. So Bitcoin's dominance, which is obviously the share of the total market cap, when the dominance falls, it usually means that money's obviously rotated into Ethereum. Why Ethereum? We've already covered that because it's, you know, it's got the most amount of liquidity. All the rest of it is the safest chain. It's proven, it's got security, all the rest of it. And then obviously now it's got an ETF. Bearing in mind, every time that we had these Bitcoin dominance, every time we've had previous cycles, every time we've had previous cycles, we've never had ETFs. Now, in the past cycles, like 2017 and 2021, that we can see here, Bitcoin dominance dropped hard as altcoins, whether that's the ICOs, the NFTs, DeFi, gaming, metaverse, new narratives, took over the spotlight, and the dominance often peaked on or around the time of the euphoria period. Even so, Bitcoin can go on to make new all-time highs because the whole market is expanding, new money is coming in, and then we have the psychology of the market that's coming in as well. Bitcoin is still and will always remain the main on-ramping asset, and obviously the safest asset. Dominance can bottom while Bitcoin later makes an all-time high, as we saw. Hang on, when did it? I think it bottomed here. Okay, in 2021, it bottomed in May. We later made an all-time high in November. The Bitcoin dominance was, between 39 to 41% at the time. Where have we been since the last bear market? Well, the last bull market. So coming out of 2021, the first part of 2021, the first peak, we went down, dominance went down. It was behaving like it was behaving in 2017. Then we ranged for a bit. The second part of the bull run, as we explained, that was mainly other coins, other narratives, and a lot of new money coming in, especially institutional money. Then from around here, which is September 2022 was, just trying to touch my glasses, I realized I don't have them on. September 2022, September, October, November, 2 months before, 2 months before the actual bottom of the bear market, we decided to go up in this channel. So we've been making higher highs and higher lows since 2022. Recently, we've broken the channel in August 2025, and then we've got some more sideways action. When you look at Bitcoin, this is not something that's new. This is something that has occurred before, that when you have a big dip, like we did here, there is a bit of sideways action before you go up again. And we had 2 years, or pretty much close to a year and a half, going sideways before we went into this channel. If we say we started this channel approximately September 2022, we broke it in August 2025. What we expected to happen, and what we do expect to happen, is Bitcoin's dominance climbing more. Why does Bitcoin's dominance need to climb? Well, the higher Bitcoin's dominance goes, the more money we have, or the more money that's going to come out or flow out into the other market, the more explosive the alt season is going to be. So the higher Bitcoin dominance goes, and I know a lot of people are against Bitcoin dominance. Oh my God, it's like too high. Well, the higher it goes, the more downwards it's going to have, the more it's going to roll over, the more money is going to flow into altcoins, if that makes sense. That's pretty much it. That's pretty much Bitcoin dominance. I do think that for the next alt season, we do need to go higher. So I do think we need to get back into this channel, and then roundabout, or maybe just under 70 Bitcoin dominance, when it's just between 60 and 70, somewhere between there, it's going to roll over, and